As you said, I'm currently with Green State Credit Union, formerly the University of Iowa Community Credit Union. We were established to help the university employees and alumni. But in my prior role, I was with the local economic development organization. And as this whole concept of cryptocurrency started to emerge, we honestly, as a community, we had no idea. And there was a U of I student named Cameron Schorg who kind of raised his hand one day. He came into the co-working space that we were at. He said, I think I get this stuff. And he certainly did. And so we would bring Cameron in all the time, and he would speak to community leaders. Many of those were bank presidents and other people in the financial industry who I think he left scared to death by what was coming down the road. But he was always so gracious and knowledgeable with his time. And we would always leave those sessions collectively thinking it's really good to be Cameron. And we appreciate all that he does. And thank you so much for being here today. We're gonna kind of get into what you're doing now a little bit and the organization you're with now, but just to kind of set the stage, we want to get into the deeper stuff, but can you get, just for people that really are still struggling to understand what cryptocurrency is and what the blockchain technology under it is, can you just give a quick overview?
Yeah, of course. Well, thanks for the introduction, Mark and Derek. Yeah, so I think it's important to understand Bitcoin and blockchain technology has been around for a little over a decade now. It actually launched in 2009. And really it kind of came after the big financial collapse that we had, and kind of got a lot of its inspiration from the problems that were stuck therein. And kind of the difference between Bitcoin and blockchain. Bitcoin is a currency similar to how the US dollar is a currency, the peso is a currency, the yen is a currency, and then blockchain is the technology that Bitcoin exists on top of. And so, yeah, I think that's kind of a really quick, like super high level thing. As far as like kind of maybe the 20-second, understanding of how it works, is that with traditional currencies, you have a government that issues the currency. It's essentially an IOU between you and the government. Your US dollar note that you hold, your Benjamin that you hold, is an IOU between you and the United States government. Bitcoin is set up a little bit differently. And really, I think herein lies the really exciting part about it, in the sense that Bitcoin is not owned and operated and governed by a government, but instead owned and operated and governed by the collective stakeholders across the world that all hold Bitcoin, that mine Bitcoin or secure the Bitcoin network, and has really turned into this global phenomenon, and kind of offers an alternative to traditional state-owned currencies.
So in its inception, where you had crypto wallets and things like that, the utilization of these new currencies was pretty limited. But where are you starting to see now? I see Starbucks is starting to accept Bitcoin, and you're seeing more ATMs popping up. But where do you see the utilization going? What are some of the trends that people should be aware of?
Yeah, well, I think, most importantly, so yesterday, pretty historic day for the Bitcoin community. It was actually the first, El Salvador was actually the first country to launch Bitcoin as a legal currency in their country. That's where you saw a lot of activity yesterday, specifically around Starbucks and McDonald's and some of these, big bucks or big names that are accepting Bitcoin for payments. I think they were the first domino to fall, and there'll be a lot of other countries and corporations and stuff that start adopting with that as well. I think most predominantly though, what's great to understand is the Bitcoin space from when I got involved in 2013 and before that, obviously has grown at an exponential rate. And when I say that, I mean there is an extraordinary amount of momentum behind what's happening in the Bitcoin and blockchain space today. There are 100 million plus Bitcoin wallets that exist today. Every major bank in the world is paying attention to what's going on with Bitcoin. Every major institution in the financial space, as well as those not in the financial space, is paying attention to what's going on. One of the stats that I kind of had teed up to talk about here was, PwC just reported a few weeks ago that 47% of traditional hedge fund managers that are currently managing over $180 billion of assets are all looking into cryptocurrencies and how, what strategies they have there. I think it's really hard to understate just how impactful and how much momentum I guess there is behind this this new wave of currency and this new technology.
Well, obviously, in terms of cryptocurrencies, I think people are aware of Bitcoin but it seems like there's a lot of new players that come and sometimes come and go. And there's a lot of volatility. And you referenced yesterday when El Salvador made Bitcoin an official legal tender. There was a 10% reduction in the value of Bitcoin. But can you just, as an investment vehicle, how should people be thinking about these various currencies right now?
Yeah, well, I think the volatility concern has always been there with Bitcoin and cryptocurrencies, and for a long time it's been like, oh, as Bitcoin gets bigger, it's going to get less and less, and like there's some signs of that happening. I think the confusion happens where you have all these other cryptocurrencies and tokens that are being launched. There's now thousands of them that exist outside of Bitcoin that have their own volatility. Some of them are similar to Bitcoin, some of them are wildly more. So I think it's important to kind of note that this is a new emerging asset class. With every new emerging asset class, you're going to have a lot of volatility, and that's primarily driven from speculation. People know this is going to be a really big thing. It's just a matter of how big, and therein kind of lies a lot of the volatility. Another big driver there for the volatility is people making these leverage bets. So they're actually it's something that exists in traditional finance as well, but it's considered to be, you're 2xing or 3xing or 5xing your risk potential by making a bet that Bitcoin will either go up or Bitcoin will go down. And the problem is that once it goes the other way from your bet, kind of the whole system starts to unravel a little bit. And that's where you see these really large drops, like what happened yesterday with 10% drop in one day. Really, that's driven by an unraveling of liquidation or of leveraged positions. I think one of the cool things with cryptocurrencies is there's all these new products that mirror what's happening in the traditional space that's coming over into crypto to help build a new financial age. And one of those things that's interesting to talk about here specifically is something called the Crypto Volatility Index. It is exactly what it sounds like, and it's a way for you to hedge against crypto volatility. So these big asset managers that are really worried about big price swings are able to actually buy the Crypto Volatility Index, short it or long it, depending whatever bet they want to make there, and actually hedge against large price swings. And so a lot of those concerns for the more institutional folks are being helped, or products are coming to market to help them. And then for the average person, it's funny, everyone wants to talk about Dogecoin, SafeMoon, this, that, ADA, Ripple, all these other currencies that are out there. And a lot of them are doing really great things. I think the concern is that people are jumping into these currencies and making sometimes considerable investments into products that they just really don't understand at all. And that's concerning, right? So happy to kind of jump into some of that and stuff and whatever, but I would put it in the same camp of people emotionally betting to buy AMC or GameStop or these sorts of things, and they're betting based on an emotional momentum trade and not on fundamentals of what is this product, what is this currency, what is this token, and is it a good long-term investment? It's kind of a get rich quick, can I get rich quick too kind of thing. So yeah, that's concerning.
Yeah. So if you had to kind of look down the road a little bit, do you think there will be kind of a handful of currencies that kind of shake out, or do you think there'll always be new players coming and going as we go?
Yeah. So what's important to understand when looking at it from that lens is that there are a lot of cryptocurrencies that exist that are trying to do their end goal is something similar to what Bitcoin is doing, meaning they're trying to create an actual new currency that people will use on a daily basis, a currency that people will use to store value, similar to how they store value in gold, real estate, those sorts of things. That kind of makes up one camp of this cryptocurrency blockchain world. There's this other camp of what I call more tokens. They're still represented on Coinbase and Gemini and Robinhood and these places where you can buy these tokens as well. But their goal as a product is not to do what Bitcoin is doing and replace the US dollar or replace the peso. It is instead to represent a digital a digital representation of some other sort of value. And that's kind of where we get into some of these conversations about NFTs, about decentralized finance, tokenized real estate. There's tokenized data sharing, tokenized file storage, all these things that are not going after the like traditional, currency product, and are instead going after like a different form of value that can be represented digitally. So I think it's important to kind of, separate things there. That being said, within each niche, so you've got the currencies that we talked about, you've got the NFT niche, you've got the real estate niche, you've got the social media niche, so on and so forth. All of these products are competing to be like the number one within that niche. So I think it's very realistic to guess or to estimate that there's going to be thousands of cryptocurrencies and tokens that exist that will be around for a long, long time. I think it will actually model something similar to what we see in the stock market, and maybe even be an order of magnitude larger as far as the amount of varieties that you can get exposure to these different things. Bitcoin today has been the number one dominant one in the in the currency space. That's probably not going to change anytime soon. That being said, like maybe something comes out down the line that is better than Bitcoin, and that's what the community goes and decides that that is more valuable. So it's really anyone's game, but it's definitely a big battle, and I think everyone understands that there's a very large amount of value to capture, and it's a great opportunity. So
you touched on a little bit. I think as Iowa fans, many people were maybe first heard about NFT when Luca Garza kind of dabbled in it last spring. But for those that are kind of new, what can you just quickly explain that? And then where do you see some an artwork and other music, but where do you see other uses for NFTs?
Yeah. So the NFT space is absolutely blowing up right now. It's kind of interesting. The crypto space has gone through these different waves, and each time they're driven by a lot of times a different asset class within crypto. And this time, a lot of the excitement around crypto, yes, you've got what's happening with Bitcoin going on, but a lot of the other stuff is all being driven by this NFT craze. And an NFT specifically stands for non-fungible token, which sounds like a bunch of garble, but ultimately what that means is it is a digital representation of a unique asset. And a unique asset can be something like a song. It can be something like a piece of artwork, or a video, or even just a little clip from a music, from a song or something like that. A unique asset can also be the ownership of a house, the ownership of a boat, the ownership of your data. A lot of different things, but ultimately what the non-fungible token means is that it's not, they're not one and the same, right? If I have this house, it's not the same as this house. If I have this song, it's not the same as this song, so on and so forth. So what Garza did was really interesting. He essentially created a snapshot of like some of his highlight reels, and then he sold the ownership essentially of those like snapshot reels to an individual. And that individual now essentially owns the rights to those snapshot reels, that Garza produced. I think he also came out with a few other things that went along with it. But that's kind of where it exists today. I think what's interesting specifically around like the art collection piece and NFTs, and we can kind of go on to some other NFT use cases, but the art NFT piece, some of the largest art collection sales of all time have happened in the last year or two, and they are representations of digital art, which is very weird to think about. People are spending literally millions and millions of dollars on these digital collectibles. Sometimes they're as simple. The craziest one I think was there was a rock, literally an animated rock. It's like 50 pixels big, sold for almost $1 million. And the owner of this rock is the only owner that will ever exist. You can't just like copy and paste it in other places, whatever. You can actually like verify that this owner has like the trademark, the watermark, whatever on that rock. It is his, no one else can own it, kind of thing. So it's crazy. There's NFTs that have sold for over $100 million. It's really a fascinating space to follow. I think what's more interesting though, besides like the dollar amounts and whatever, is just this trend of creators, whether that be an artist, an athlete, musician, whatever it may be. Like, they're finding new ways to create value online and to connect with their fan bases. And it's really kind of signifying the dawn of these like social tokens, or these like these artist tokens, musician tokens. And there's a lot of projects that are doing some really cool stuff in that space. And I think it's kind of this idea that the pendulum, it's about time that it swings more towards the creators and less away from the record label companies, from the auction houses, from the from these middlemen, essentially, that are sitting in between a athlete, a musician, an artist, and their fan base. And the blockchain technology is really giving these people as well, the fan bases and the creators, kind of that place to meet in the middle, and the technology to do so without needing any middleman. And we're seeing kind of a Cambrian explosion happen in that space because of that.
So tell us about the organization you work for. You're in decentralized finance. Tell us about the business that you're with and what you see there.
Yeah. So the decentralized finance space is relatively new. It really took off last summer. We call it internally, DeFi summer. And ultimately, as I mentioned, there are these different technologies within the cryptocurrency space. Bitcoin is an application that exists on top of blockchain. Ethereum is the #2 cryptocurrency that exists today, and it is more of a general purpose technology than what Bitcoin is using. So it's actually a different blockchain than the blockchain Bitcoin is using, but it's built in such a way to allow a lot of other applications to build on top of Ethereum. And so really what happened last year is that there were hundreds, and now there are thousands of companies that are building decentralized finance applications. And I can kind of go into exactly what those are, obviously, with where I'm working today. But they built these technologies on top of the Ethereum blockchain, and kind of leverage the Ethereum blockchain for the like settlement and transaction layer stuff, but are doing a lot of really cool things a layer above or 2 layers above them. And so specifically, what I'm up to today is working with a company called Notional Finance. We specifically help people get fixed rate and fixed term, or essentially access to fixed rate, fixed term loans. So and we have created a marketplace to allow people to do that. So as an individual, you can post your money and lend it to someone else and earn a 7 to 10% interest rate kind of thing on your assets. And then as a borrower, you can do the same thing. You can borrow at 7 to 10%. Specifically, the assets that we use to borrow or to lend are all crypto assets. Meaning you actually are lending your Bitcoin, you're borrowing Bitcoin, you're lending Ethereum, you're borrowing Ethereum, and that sort of thing. And yeah, it's been quite the ride. We just raised a pretty big Series A, and are kind of moving head fast into launching our big product here in a few weeks. And happy to kind of dive into more of that. But at any point, we're just one piece of this decentralized finance space. We're kind of playing the lending and borrowing markets. There's also all of this stuff within DeFi that are doing, decentralized exchanges. So everyone's familiar with Coinbase, or at least like if you are in crypto, that's the #1 exchange. There are people building alternatives to Coinbase that are owned by the community instead of owned by a company, and that's called the decentralized exchange. There are people doing like derivative products and perpetual products and insurance products where you're creating essentially insurance mutuals that exist on the blockchain rather than through a specific company, and lots of things there, and they kind of all exist within this decentralized finance space.
That's a lot, and it's fascinating.
Yeah.
And again, I'll come back to it maybe later, but I think that one of our questions as I'm sitting here in a credit union is, where do you see some of those future? But maybe we'll come to that. As exciting as all this is, there are some downsides that we want to, we have to talk about. One is the energy use. There's been a lot written about how much electricity is used to maintain the blockchain and some of these. And then the other side is the potential for these currencies to be used for more nefarious purposes. We see a lot of articles too about kind of the phishing attacks. Hackers are saying, we've got locked up your company's data and you can get it back, but you have to pay us in Bitcoin, so it can't be traced. So how should people interpret some of those two more difficult issues?
Yeah, sure. Well, I mean, for one, I'd love to talk more about like how the banks exist all within this space. To your point, we can talk about stable coins there. I think that's an important piece to touch on. Kind of more on some of the downsides, I think. So it's important to note that the way that the Bitcoin network maintains itself is through this process called mining. It essentially means that you are like devoting your computer to like helping secure the Bitcoin network. Now, what's happened over the last 10 years is that this has just blown up, and there are now an incredible amount of computing power that's behind the Bitcoin network. And in order to deploy that computing power, you've got to have a lot of energy that goes into it. Think of like maintaining 500 massive Amazon data centers around the world. Like that kind of type of energy required is what's requiring to like secure the Bitcoin network. There's gotten a lot of the community's gotten a lot of flack about that concern about using energy and how it's not a very sustainable thing, as well as like where is the energy coming from. It was really interesting. Elon Musk, was brought up a lot of attention to this, and obviously he's a big proponent of sustainability and green energy. And I think there's a few parallels that need to be drawn here. One of them is that Bitcoin is the #5 largest currency in the world, behind the yen, the euro, the US dollar, and the yuan, right? And so like it is a massive force. It might be okay, or at least it should be considered that like there's a lot of value there, and so it's okay, like probably okay if there are some resources that need to be devoted to like maintain that value. So that's one thing. I think the second thing to pay attention to here is the existing US dollar also requires a tremendous amount of energy to maintain. And where I'm going with this, you, Mark, you're sitting in a bank, you guys have the lights on, you have a big office building, so on and so forth. That is all a piece of what Bitcoin is building. So, the US banking system has hundreds of thousands of employees. The federal mint requires a lot of employees, all this sort of thing that is required to maintain the US dollar system. And then, what's required to maintain the Bitcoin system is obviously all this energy and stuff too. So just to kind of set the stage, like they really should be compared in parallel. I think, that being said, it is a concern that the Bitcoin mining process is not using the cleanest energy that it could be, and not doing it all in a sustainable way. What's really inspiring to me is after a lot of this was like brought to light, specifically by Elon Musk, the Bitcoin community, specifically the mining community, all got together and actually formed a coalition within like a few days to address the issue and start reporting all these mining operations. They've started to report where they're getting their energy from, what percentage of it is renewable, some things like that. And I think the trend is actually to have the Bitcoin mining process be more and more sustainable, more green energy behind it over time. And it's actually happening pretty rapidly, thanks in part to people like Elon Musk, like pushing the community and telling us like, hey, we can do better. And so, yeah, I think that's an exciting development. And to be honest, like, I don't imagine that being a big problem for Bitcoin for too long. It's something people, the media likes to latch onto, but it's in reality, I don't think it's necessarily the biggest concern. Then, on the second note around some of the nefarious uses that can be used for Bitcoin, there's a lot to unpack there. I think, again, for starters, it's important to compare things in parallel. The US dollar is the #1 currency that's used for sex trafficking, child pornography, guns, trading, all that kind of stuff. It's the US $20 bill is the #1 currency that's used for that. Obviously it is a bad externality or a bad consequence of having the US dollar, but it is, there's a lot of other parts of the economy that aren't nefarious that are using US dollar as well. And so it's kind of an acceptable consequence. I think it's a similar, scenario in the Bitcoin and crypto space. Specifically, there was a bad rap that Bitcoin got when it first launched. Because at the time, back in 2011, 2012, maybe, a lot of the early use cases for Bitcoin was for some of these more nefarious uses. But that being said, it's not surprising either. We're sitting on a Zoom video call. the very first people to ever use, or to like really help develop a lot of the video technology conferencing stuff was the pornography industry as well. And so like it's, criminals often are the early adopters of technology. That's what happened in cryptocurrency as well. That being said, since then, the space has absolutely exploded. And now, I mean, you've got, again, the biggest banks, the biggest institutions, the biggest whatever that are holding Bitcoin on their balance sheet. You have a country now holding it on their balance sheet. It is no longer just a nefarious, use case asset kind of thing. Then that being, that's kind of that piece of it. Then the piece of it around like ransomware and those sorts of things. It's definitely a problem. It's going to become a bigger and bigger and bigger problem as time goes on. I think, a few things. One, it obviously shows that a lot of companies aren't securing their data and your data a lot of times in the ways that they should be, to be, to even be, hacked in the first place is a problem, right? And then again, like if you are hacked, Bitcoin is like, why would you ask someone to like deliver a suitcase of cash when you can have them send money digitally? So it just makes sense. That being said as well, it is funny. A lot of times these criminals are a lot stupider than you'd think. And they have these big ransomware hacks, specifically like the pipeline one that happened pretty recently. It actually increased gas prices across the country. It was a really big deal. And they were holding the company up for a Bitcoin ransom. Almost immediately after the Bitcoin was paid, the ransom was paid, a lot of the trails of where that money went were discovered. The money was kind of frozen basically, and those people were gone after. So it's interesting that people think Bitcoin is like also the most anonymous best way to collect money. You're actually better off, as ironically, like getting a suitcase of cash if you wanted to hold someone for ransom than doing it on the Bitcoin network. Bitcoin is actually very traceable as far as where money is going and who it's coming from and all that sort of thing. And there are now a lot of companies that are helping the government and with an analysis, forensics, and stuff like that to help with all these issues. That being said, as Bitcoin gets bigger and bigger, it's only going to become more and more of a problem as well. So I think that's interesting. And the community often as well in the Bitcoin space like gathers around folks that are, I think we're a pretty altruistic community a lot of times. And when companies do get hacked, when there are bad things that happen in the space, we try to gather around those folks and really help them out as much as we can. There are protocols that exist out there, in the decentralized finance space, in the NFT space, whatever, that are hacked. And these are hacked and they're actually stealing people's money that are in those protocols. What's been just amazing to see is it seems like the trend is for actually a lot of these, we call them white hat hackers. But basically these people that will go in and hack a system, they'll drain the protocol of hundreds of millions of dollars sometimes, and then return it all a few days later. And we've seen this happen time and time again. And really all that does is it builds a more robust, more resilient ecosystem and space, to the point where when we onboard the other 95% of people that aren't in crypto today, the system will be, will be stronger, more resilient, and like ready to go, basically. So yeah.
We're getting some good questions here in the Q&A, and those are great answers, Karen. Thank you. The first one here, what improvements does Bitcoin provide over more traditional currencies? What makes Bitcoin a usable currency rather than as an investment vehicle? And I'm sure a lot of like business owners are trying to figure out too, like why would I want to engage with Bitcoin? So can you help shed some light on that?
Yeah. So at the very beginning, when I was talking about what is Bitcoin and stuff, I mentioned that Bitcoin is a currency that's owned, operated, and governed by a global, by a global population. It's like kind of Bitcoin for the people, by the people is the motto there, really. And what that means is a few things. It means that it's not as susceptible to individual country regulations, individual country sanctions and censorship concerns. So a lot of people like Bitcoin for that perspective. The other big thing that a lot of investment companies, big banks, and financial institutions really like Bitcoin for specifically is that it is oftentimes considered an inflation hedge. The amount of Bitcoin that will ever be in existence is 21 million. I think that comes to light specifically in this last few years with COVID and the incredible amount of money that has been printed and put into circulation in the United States. I forget the exact numbers, and so don't hold me to this, but it's somewhere around 50+% of all money that exists today. So 50% of all US dollars were put into circulation in the last like 14 months. It's really pretty incredible when you think about, like, you have $1 and your $1 can buy a candy bar, and tomorrow this isn't actually happen this fast, where like a week later your $1 can only buy half a candy bar, but effectively that's what's happening, is that the purchasing power of the US dollar is going down over time as more and more money is printed. And a lot of people really like the aspects of Bitcoin where it is capped at 21 million. And that means if you own one Bitcoin today, you will always own one Bitcoin, or whatever percentage that is, like 0.002 or whatever, that's you'll always own that percentage of the entire network, and no more Bitcoin can be put into circulation. And famously, there's been Ray Dalio, Druckenmiller, like the biggest hedge fund names that exist today, have come out and said that they think Bitcoin is a great inflation hedge. They don't know why people would hold bonds instead of holding Bitcoin. I mean, there's a lot of like really I don't even want to call them aspirational, because they're closer to that makes it seem lofty. These are statements by extremely well-intentioned, extremely smart people in the financial space that are saying Bitcoin's a great hedge against what's happening with our US dollar.
And that those are great points, and that brings up and Kent in the Q&A is asking this too. And where do you see regulation and taxation going? The U.S. government, other governments, has this gotten beyond what governments can even regulate at this point?
Yeah, it's definitely an interesting space to follow. One of my concerns around this space for a long time has been there is a point at which this space reaches escape velocity. And what I mean by that is, it has gotten so big, and there are so many institutions, so many people from so many different geographic places, that there is no one government, no one company, no one group of people that can have a material impact on the development of the space. For a long time, I was really concerned about that. I'm a lot less concerned about that today. I think we've reached the escape velocity, which is really exciting. I think most notably, China has been really cracking down on Bitcoin. In fact, they actually banned Bitcoin mining in the entire country. It's one of the things that caused the big crash that happened in Bitcoin back in April and May. What's been amazing to see, though, is how quickly the Bitcoin community bounced back, how quickly all those companies that were in China changed their locations and moved their entire companies into other countries. And I think that's a great sign for what's to come. It's important for countries to see that example and to realize this isn't a beast that can be slain. It is something that should be regulated sensibly, and is something that if you regulate too hard, you're essentially going to push really smart people and really great companies out of your country. And that's what happened in China. I think the US has taken a much better approach with it. And they kind of sit somewhere in the middle. There are other countries that are even more open to what's going on in the Bitcoin space. And those countries are seeing a lot of benefits from it. Some of the largest companies in the world are probably being built right now in places other than the United States, because the regulation is set up in such a way to invite them in. So that's kind of, I think, from like a high level where I see it going. Then around like the taxes and stuff like that, Bitcoin is seen as a property today. It's interesting now with El Salvador considering it a legal currency or legal tender. There's some confusion maybe around if it is property anymore, but IRS for a long time has considered cryptocurrencies property, which means you should pay taxes on them the same way you pay taxes on your real estate or your art or any other property you may own. There are different groups of government that regulate different aspects of Bitcoin, cryptocurrencies, their sales, the development of the ecosystems and stuff. You've got the SEC, the IRS, the Department of Treasury. They all have their hands in it in different ways. But Yeah, it's definitely a misnomer or a misrepresentation to think that like the government hasn't regulated crypto at all yet. Like they're very much for a long time have been very hands-on with what's going on in the space.
Here we got a great question here from Craig. Do you recall the price of Bitcoin the first time you purchased any?
Yeah, I think so. This was 2013. I mean, the first Bitcoin I bought was like sub $50. So it's you know, one of my favorite charts that I used to like to show back at Iowa in you know 2017, 2018 when Bitcoin went from $1,000 to $20,000 at the time. Was this chart just kind of showing Bitcoin over a long time scale, and you know, like you can see where I bought in at, and it's like not even a blip. At the time, it was like a really big spike, right? And the point of the chart was not to show like, hey, look how cool this is. I got in way back here. You know, the point was to show like this is where we were at. But if you zoom in on the spot where I bought Bitcoin, the chart looked the exact same. And ironically, you know, if you show that chart today, that $20,000 spike back in, you know, in 2017 would look like a much smaller blip compared to where things are at today as well. And really the intention there is to show like, you know, these things go through cycles. They go up, they go down, they go up, they go down. But if you zoom out on a long enough time scale, really everything is up and to the right.
All right, we got a whole bunch of questions here. I'm trying to roll.
Yeah, awesome.
Can you help Matt convince his family to put some money into Bitcoin? What reasoning should he give them to invest?
Yeah, I mean, to start, it's important to never invest anything you're not willing to lose, really. Bitcoin is an emerging asset class. It is not something that is like, you know, you're going and putting your money into like, I don't know, like it does go up and it does go down. So everyone has different requirements for like when they need the money, what they expect to make on the money, all those sorts of things. I would not recommend putting any money that you are not willing to lose, just to start. The second thing is, as I mentioned earlier, like it's important, I think, with any investment, whether that's Bitcoin or real estate or stocks or whatever, that if you're going to invest in something, you have at least a high level understanding of what's going on and what product you're purchasing, essentially. So that's important. I mean, if you're looking to get your family in, I'd recommend them, you know, go watch a few YouTube videos, like take an hour, take 2 hours, research it a little bit, and kind of get comfortable. Maybe you send them this talk even, I don't know, and get them comfortable with like what it actually is. And then secondly, on there, I would build a portfolio. As I mentioned, there are literally thousands of different cryptocurrencies and tokens that exist today. Bitcoin is the one that I hold the most of. You know, it may not always be the one I hold the most of. It is today, but I also hold 20 other coins that exist also. And so I have a whole portfolio similar to how, you know, in stocks, you might not put all your life savings into one stock. You kind of diversify. I would recommend the same thing in cryptocurrencies. So yeah, I don't know if that goes into it deeply enough or not. And I'm happy to share specific resources and specific videos, you know, later or whatever. Feel free to reach out to me or whatever. And yeah.
Well, as a kind of follow-up to that, one of your old professors here is asking, and prefacing this, that you're not giving any investment advice or guidance in any way legally, but are there some other currencies that you're looking at right now that people might want to pay attention to?
Yeah. Hey, Joe, I see your questions there about Solana. So yes, you know, everyone always like, they think the Bitcoin and Ethereum, you know, movement or has been played out. That's not true, right? As I mentioned earlier, like you zoom out on these charts and, you know, $100 seemed like insane 8 years ago, and then it was 10,000 seemed insane, and then it's $100,000 it seems insane. So like these things are still moving in orders of magnitude, you know, and so there's still a lot of upside, I think, to be captured there just with Bitcoin and just with Ethereum. You know, that being said, there are these other currencies that are trying to do similar things to what Bitcoin is doing and trying to do similar things that Ethereum is doing. Solana is one of them. It's seen like a tremendous rise in the last, you know, few months. I own some Solana as well. I actually know the team. They're kind of, a lot of them are based here in Boulder or in Colorado as well. But again, it's tough because there's thousands of different cryptocurrencies that exist today. A lot of those are not going to exist in a few years. Some of them are even really large and they won't exist in a few years. And you can't hold all 5,000, you know, different currencies. So you kind of have to pick the areas where you think you know enough about, and kind of make your bets there.
Kurt is asking you to compare and contrast Bitcoin to Waymo. Is there?
Yeah, that's interesting. I'm not sure I fully understand the connection or the parallel there. Yeah, I don't know, Kurt. Maybe you can ask another question, defining a little bit more what you mean there. I'm not sure where to go there.
What prevents Bitcoin from surpassing that 21 million level?
Yeah. So we have this motto in Bitcoin that's really actually in like the cryptocurrency space at large, and that's trust code, not people. So the monetary policy of Bitcoin, so that 21 million hard cap is actually hard coded into the Bitcoin protocol itself. So it cannot be changed in the same way that the government can pass a new bill that asks to increase the budget and ask for the Fed to buy up a bunch of US treasuries or something like that and essentially print more money. That cannot happen in Bitcoin. It's actually something that's hard coded into the protocol itself.
What are some of the best resources to learn about crypto investing? Are there some sources you trust that you'd encourage people to look at?
Yeah, I mean, I think there's a few really great products out there. Coinbase is a public company. They are probably, again, as I mentioned earlier, like the ones that people recognize the most. They have a lot of really great resources on their websites. They even have these cool little quizzes, essentially. They call it Coinbase Earn. It's a place where you can go and watch a few little videos and take a quiz or two and earn like $5 or $10 of that cryptocurrency. It's a great way to get a tiny bit of exposure and to teach yourself a little bit about some different coins. There's some other products out there that do that as well. Another really great education group is called Consensus. They put out some really great reports, infographics and stuff like that. That being said, the very best place to learn is to go buy $10 of Bitcoin, go buy $10 of Ethereum, and start playing around with it. Send it to your friends, send it to your, your parents. Reach out to me. I'll happily send you $5, $10 of Bitcoin, and we can do a few transactions back and forth. I've done that a lot. Used to be one of my favorite things to do at Iowa as well, is just getting everyone their first, $10 in Bitcoin. So happy to do that also. And lastly, get on crypto Twitter. Twitter is the place that all these companies are hanging out. It's where all the discussion and conversations are going on, is on Twitter. And if you want a place to learn and kind of lurk, it's a great place. And if you ask any questions, pretty quickly, someone will jump on, I'm sure, and help you.
So, and you touched on a little bit, and you were really, I think, as much informing this folks at Tippy of what was happening while you were a student, but talk a little bit about your time at Iowa and how it prepared you for all the success you're having now.
Yeah, of course. So I mean, Iowa was just the most amazing place to go. My background is I grew up in Colorado Springs. I was born in Iowa. My whole family is in Iowa today. And I actually went to a different school for the first semester of college and really didn't like it, and was looking to transfer somewhere. Either wanted to go to Iowa, kind of around around family, that kind of thing, or go back to Colorado. And the actual move that made me decide to go to Iowa was JPEC, the entrepreneurship program within the Tippy College of Business, and kind of all the resources that were available there. As you can imagine, I've always been kind of the entrepreneurial sort. I've run my own companies. I've always been involved in startups and that sort of thing. And so that was really the big pull for me to get involved at Iowa. And I was, to be honest, and still am, blown away, I guess, with the resources and mentorship and opportunities that JPEC and the Tippy College of Business were able to to put forth, and you as well, Mark, at ICAD and Merge and everything that was going on there and whatnot. Iowa City and Iowa, University of Iowa have always been a real special place for me. So.
Well, thank you. We hope you'll come back and see us and not forget about us. And who knows, maybe at some point the Center for Advancement will be investing part of their endowment in Bitcoin and providing a future legacy for the university through that. But thank you so much. I think anyone who's on this can see why we were always so excited to reach out to Cameron, and why he's just such a phenomenal source of information in this, and we wish you all the best of luck, and thank you for being here today.
Yeah, awesome. Thank you so much, Mark. We're really excited to talk to people. I just posted some of my contact information. If anyone wants to reach out to me and has questions or whatever, I'm happy to talk more about Bitcoin, crypto, my company Notional, and where there might be an opportunity there too, or just Iowa and entrepreneurship as well. So
thank you, my friend. You're awesome.
Great. Yeah, thanks so much, Mark. Thanks everyone. Appreciate it.